Okay, so very good morning. Hope everyone is well. It's Tuesday the 12th of December. Just to give you a quick update, what we're going to do today, a little bit different because Sam North, our senior analyst, is going to jump on the mic as well to talk you through a couple of the charts technically and a couple of the strategies that he's looking at across assets. So really my purpose for this morning is just to get you up to speed with how the markets have opened this morning, some of the reasons why and the things to look out for, and then I'll hand over to my colleague Sam, who can take the baton to talk about trading strategies. So first of all, just looking at the charts, we have a little bit of a slight risk-off tone in terms of the equity performance, but really it's all very marginal, I'd say, because if I'm looking at the Japanese yen and gold, there's not really a great deal of movement that has occurred. Both are roughly flat to slightly negative at the moment in dollar yen and gold. But the thing that's just catching a bit of an eye is a little bit of a drift off in Asian session off the highs in the S&P. So yesterday's strategy worked out quite well in terms of the SPUs, because a lot of the questions we had yesterday was, you know, why is the US equity market going up? And really I kind of flipped that question around to the person who asked me as to, you know, why would you sell it at this point? There doesn't really seem to be too much at risk. And when we were trading down towards yesterday at the respective pivot level, which is really around here, was when we were looking to get long the market, with this overall second target was the all-time high, which we just touched in the early part of the Asia-Pac session. One of the things is obviously the US tax reform is one of the key catalysts as to whether or not, in the short term at least, this rally can be sustained. And if you look at that from a time horizon, then actually for this to be signed off and brought in front of the president, well, that's not going to happen this week. That's really going to be more towards the end of the year, and so hence a collapse of that deal isn't really a big risk, which is what made us feel more bullish about equity certainly yesterday. Now we're back up at these all-time highs. It wouldn't be surprising to see this kind of natural movement of some profit taking, but again, nothing's really changed other than to pick another entry if we're looking at the SPUs to want to re-enter to maintain this more elevated price action. So I'll leave that to Sam to see what he thinks from a technical execution perspective. But looking at the DAX this morning, that has drifted a little lower. It did see yesterday we got down to what was the respected S1, so we've broken through yesterday's lows very early this morning, and as the cash market's gone underway, the futures closed a gap on last Thursday's closing price, and it shot lower on the breach of that, so really more of a function of stops getting run through that support level. As you can see, quite an extension on the selling, and we reversed back to that level. So on the recovery here, might be quite interested to watch it around these levels at 13,100 or so for that previous support now turned a resistance level. So as I said, there's not really much that's occurred from overnight, and the price action is relatively muted so far. There is a lot going on the calendar to look forward to, so it probably explains the apprehension slightly in the marketplace. You've got the three major central banks, you've got the Fed, the ECB, the Bank of England, you've got UK inflation, wage data, retail sales, you've got US CPI, so there's a lot coming, and so maybe investors just preferring at this point to just really sit on the sidelines and await some of these bigger events to unfold to make more decisive decisions as to where they want to take this market at this point in time. In terms of the close on Wall Street, that was marginally positive, but that really did fail to carry through into the Asia-Pac session. This is really how Asia has finished, or is still trading at the moment, in case, I guess, of some of the other markets. But the Shanghai comp underperforming slightly. As to what I've read, this is to do with some regulatory concerns still circulating in that domestic region. Then the Hang Seng also lower, the Nifty in India, the Kospi and the Nikkei, Korea and Japan, likewise seen in negative territory. So any of that positivity, if you like, from the US close has failed to materialize into the Asian session, but no real one big catalyst to prompt the selling. Looking at a couple things though, looking at crude oil specifically, what's quite interesting here is WTI crude continues to trade up towards what is now, I'm just waiting for my chart here to update. But just while that does, what I was looking at yesterday essentially was a decent move in Brent, because Brent has broken above $65 on a pipeline shutdown. So the two often do tend to see a bit of move in step with one another, but particularly when there's a big uptick in price action in one of the products, it can often have a read across and move in sympathy in the other. So what's happened here essentially is operator of the UK's North Sea's main pipeline, Forties pipeline system, or otherwise known as FPS, said it would likely be shut down for weeks for emergency repairs. So again, that's probably the key point here. These are emergency repairs, so non-scheduled, and therefore the price has to revalue for this unexpected event. So this sudden shutdown of a major North Sea pipeline yesterday has created a pretty decent uptick in the price of Brent. So looking at WTI this morning, just going back to the chart here, you can see we've been continuing to claw back much of the moves that were seen to the downside last week, midweek. And if we continue this ascent, then definitely on the intraday basis, R2 looks quite interesting. Not only that being just short the $59 handle, 58.84, very close proximity as well to the highs that we printed back on the 1st of the month. Just having a look, what has been interesting is that we were talking about this a lot ourselves, about this buy the rumour, sell the fact potential risk that there could have been with the OPEC meeting. That did play out to a certain degree, but certainly maybe not to the size of which many would have anticipated. And one of the key things here is, despite the dip that was seen back at the beginning of the month, we have recovered quite aggressively, and here we are back up towards the upper bound of what is previously at these levels up here, which would be kind of $59, a 2-year high. So OPEC seemingly have done their job thus far, the extension throughout the end of 2018, but I guess it's the overall commitment for them to continue to want to prop the market, which has kept the market happy on the supply side. Then on the demand side, obviously economic growth generally speaking continues to pick up pace, and so the supply and demand equation, if you like, the imbalance that there had been, is starting to draw back into a more natural point to eradicate the oversupplied nature of the inventory situation in the crude market. So as that occurs, definitely we'll be keeping an eye on the upside levels. As I said, these are within what you could call striking distance on an intraday perspective, because another 50 cent on the 50 cent gain we've seen already so far this morning is not out of the realm of possibilities in terms of an intraday move for crude. So worth keeping an eye on some of those upside levels. But again, recently, not so much OPEC commentary, but this move in Brent on the back of this 40s pipeline system having a disruption, seemingly just capturing a bit of attention. Want to turn attention back over to the pound, because today is quite key. As you'll know, we have UK CPI data, 9:30, and I did send out this research report to you from ING. A really great little piece here, because it really summarises the key economic data points, as well as the Bank of England coming this week. Should take you no more than a couple of minutes to read, but it will get you up to speed of what the general expectations are for the forthcoming events. Now, looking at inflation, they actually say inflation anticipated to slow, i.e. we've kind of hit the peak, if you like, and now we should start to slow down slightly. This is just one bank's thinking, of course, but what they say to kind of back up, if you like, that particular argument is that a bulk of the pound's depreciation has now passed through to inflation, and both core and headline inflation will start to trend lower through the spring. The question now is whether domestically generated inflation will speed up next year, but sluggish growth and political uncertainty could limit firms' ability to increase prices and wages. So I think that latter point is quite interesting, actually. And as this net effect of the sharp fall that was seen immediately after the June referendum in 2016 starts to fade out, we start to see more of what's the true underlying inflation situation in the UK. And you would have to say that, just given the fact that these Brexit talks have still got a long way to run and the greatest hurdles are still yet to be navigated or crossed, then hard to see that wages will really start to pick up with corporate uncertainty in that environment. And so as such, then inflation you would imagine on that basis should start to peter out slightly, which should be something we will be mindful of as we go in towards today's data. Having a look then at UK inflation, this is what we've been looking at more recently, and of course you'll know the pattern, you'll be very familiar with it. That is that UK inflation on a year-on-year basis has remained at more than a 5-year high of 3% in October of 2017. If you remember last time, actually it came in just marginally below expectations of 3.1, so we've remained consistent here at 3%. If we start to draw out the chart here to look back, so this is what we're talking about. Really, you've got to go all the way back to 2012 at this point to when inflation really was at this high. On a core reading, of course this will also need to be watched closely, but that's also leveled off at a 2.7% level, and again looking back historically, you're looking at going back even further, so really we're talking about the peak here towards really the beginning of 2012, end of 2011. But the point is this the top, and if so, do these inflationary threats start to dissipate slightly as time goes forward? Looking at the calendar for today, so that's coming up at 9:30, and that's certainly a key figure to look out for from a UK perspective. And again, this really kicks off a sequence of very important data. Wages will be tomorrow for the UK with the latest employment numbers, and you get retail sales, which I think is going to be very interesting, which will be on Thursday with the Bank of England rate decision as well. Other things to look out for, you do have the German ZEW economic sentiment that is coming out at 10 o'clock. So this is a fairly interesting figure because this is what the previous historic numbers look like. Now it's interesting because this is a measurement of the optimism that analysts have about the current and expected economic developments in a 6-month horizon. So in that essence then a soft economic measure, sentiment reading for future expectations. The difference here between IFO and ZEW, of course, is that IFO is a survey of companies, whereas ZEW is a survey of 350 experts across industry who are asked the surveyed questions. So one thing here though, we have had a fairly consistent reading of improvement, and if you X out the kind of August print, which was subdued, really this is tracking at a fairly high and comfortable level, because if we stretch this out onto a 10-year chart, really we've been around this 20 point for the last couple of years, so not really looking for this to be too much of a market mover, but certainly I'll be monitoring when it does come out. We're looking at very minor fall from the prior month to 18 from 18.7. Otherwise, going into the afternoon from the US, ahead of CPI, which we'll get tomorrow, you've got US PPI today, so that'll be at 1:30. And then going forward, API crude oil inventories, as per usual, will be later on this evening. Draghi, which was on your calendars, the weekly one we sent out yesterday, just having a look there on the latest, he's speaking on the occasion of the closing of the cultural days. So it looks like to be a non-related event as far as monetary policy and the economy is concerned. No text either, so limited risk around that event, I'd say. Okay, on that note, going to hand over to Sam, and he'll have a bit of a run through of some of the charts and the setups he's looking at this morning. So thank you very much, guys, and have a good day.
Yep, good morning, guys. Just going to have a run through some of the charts I've been looking at this morning, and some as well that I'll be looking at for the first sort of time. So we'll run through those together. The main mover as I was coming into the office this morning was probably the DAX, as you can see here. If I just lower the time frame down, once it loads up, having broken through the pivots. Let me just see if that loads up on a different time frame. Just wait for that to load. We'll look elsewhere while that does. In terms of the Aussie dollar, I did post into the chat earlier that pushing higher, coming up to some interesting resistance to be aware of. As well, you can see the euro here with the DAX pushing lower. Got a bit of a bid coming up towards that R1 level. Looking quite interesting actually. If we draw a bit of a trend line on here, connecting those highs around the R1 today could be quite an interesting point in the market, along with that top of that sort of trend line to sort of see price come back lower. Obviously, we've got the central bank meetings coming up. Let me just refresh these charts. Hopefully, they will start working. Okay, the charts just aren't uploading for the second. So what we'll do, once they start to upload again, we'll come back and we'll run through those, any sort of setups you guys have as well. Please get them in the room and we can go over those as well. So I'll get back on the mic once the charts update.